Hey, what is up? What is up? So what we're going to do today, we're going to take a look at trading some Forex off of the 20-day moving average. I know a lot of people have been asking me, how do I make this money in the Forex market so fast? I'm just going to show you a couple different steps and strategies that I use. Now, keep in mind, these strategies do not work 100% of the time. You do need to combine these with a couple key other factors in order to enter the trades correctly. So make sure that you watch the previous videos that I did and some of the up and coming ones as well to know how to combine this so everything works together, so that way you enter trades correctly and make sure you're profitable at the end of the day. So what we're looking at right now, we are looking at the New Zealand dollar versus the euro. And then what we have here is a 20-day moving average. Now, there are a couple different moving averages that are very popular that people like to use. I combined a few different ones, but I don't like to clutter up my charts with a whole bunch of different indicators. All right, so let's go ahead and just take a look at the way that this actually performs. So I'm just going to go back a little bit, and you're just going to see where will be some good entries for using the 20-day moving average. All right, so we'll look here from on July 13th, and we'll see that every time that the price bar bounces off of this 20-day moving average, you can see when there's going to be some price shifting or which direction that the trade is actually going to go in. So if you look at it right here, it was trading under the 20-day moving average right here. Every time it came close, it just failed to break that level. So as you see, the next candle bars, it just kept going down, kept going down. Once it finally broke it, it went up a little bit, it came back, and it retested. Now this is your area right here. It broke it, it came back, tested this area again, and then it broke it one more time. Now it came back down to the 20-day moving average, and look what happens. Once it opened here, it came down, it tested the 20-day moving average. You can see the candle wick came down. It could not break it to take it down lower. So what happens? Retest it again, head it back up, okay? And this is the same type of price action that you're going to see a lot of the time when you're following these trend lines from using the moving average. All right. So we'll look at it again right here. It finally broke the 20-day moving average. All right. And look what happened. Right here. It came down. It could not break below it. Steadily climbing up. All right. Once it finally came down and broke below the 20-day moving average, you see what happened to the next candlestick? It went down. Okay, now there's no telling how long that's going to stay down. You can use some other different indicators and make sure you're using Fibonacci and a couple different other things to kind of see which direction this is going to go. But this is a good place to start at to know how to understand the moving averages. And this is just using a single 20-day moving average. Now, in another video, I'm going to show you a moving average crossover strategy that you can use in order to implement this. But as you see, every time that wick comes down and it can't break that 20-day moving average, the price is continuing to go up. Once it finally breaks it, you can expect the price to go down for the next candle bar. Okay, so just take a look at the way that this is actually flowing. I would definitely tell you guys to do some back testing on this. If you're using TradingView, you can always do back testing and look back and just study the way that these charts actually function, so that way you get good confirmations on when to jump inside of a trade. There are a couple different popular moving averages that people like to look at. I like to use the 20, I use the 100, I use the 200. It really depends on what Forex stock that I'm going to trade, and that's going to determine on how I'm going to use the moving averages. So hopefully this very short video gave you a good explanation on how to use a 20-day moving average when you're trading Forex. Make sure that you combine some of the other videos and the other strategies that I've put together for you guys, so that way you can learn how to enter these trades and make some profit in a short amount of time. Once again, this is Like a Smith. If you're going to be trading Forex, you're looking to make money, make sure you're trading like a Smith.